Welcome to Debt Free in 30, the show where every week we take 30 minutes and talk to industry experts about debt, money, and personal finance. I'm Doug Hoyes. I started this show almost a year ago to provide practical advice on how to become debt-free. As regular listeners know, I'm the co-founder of Hoyes Michaelis & Associates, one of the largest firms in Ontario that does personal bankruptcy and consumer proposals. And so, obviously, I'm biased. I think for a certain number of people, those are good solutions. However, this is not the Doug Hoyes Show, and I've tried very hard to present different points of view on this show. I don't want to just present my opinions. I want other opinions so that you, the listener, can reach your own conclusions. For example, I'm a big supporter of local, not-for-profit credit counseling. I believe that for many people with money problems, sitting down with a credit counselor and working through a budget and looking for ways to save money is a very worthwhile exercise. A second pair of eyes to review your situation is, for many people, a good idea. Local credit counseling agencies provide a holistic approach to solving problems. Most of the agencies I've dealt with provide a broad range of counseling. They deal with the whole person. Debt problems are often caused by other issues like marriage problems, gambling, drinking problems, and other addictions. Full-service, local, not-for-profit agencies deal with the whole person and can help with counseling on the underlying causes of the issues. When I say local, I mean a person you can meet with face-to-face in your own town, not just a voice on the telephone. By not-for-profit, I mean a counseling agency that uses most of its resources to provide services in the local community and doesn't spend a lot of money on administration or advertising or other expenses that don't directly benefit the local community. I've had two local not-for-profit credit counselors on this show. Heather Cudmore from Carizon and Kitchener was my guest back on show number 4, and Sue Davey from Brant Family Counselling was my guest on show number 7. And like all previous shows, they're available on iTunes and on our website at hoyes.com. On both of those shows, we had a frank discussion about the pros and cons of credit counseling. So, is credit counseling the perfect solution to your debt problems? As I've said, we've had two credit counselors on the show explaining why credit counseling is a good solution for some people. And I've told you my personal bias. Local, not-for-profit credit counseling is a good solution in many cases. Today, we're going to go a bit off the board and talk to a guy who has a slightly different opinion about credit counseling. Like I said, I'm not going to agree 100% with all of my guests, but that's what makes this show interesting. So let's get started. I'd like to welcome in my guest. So who are you? Where do you work? And what do you do?
My name is Richard Dunwoody, and I'm with AFO Venture Group. AFO provides consulting services to the financial service industry, creditors, and those companies that support the creditors' operations.
So when you say consulting services and creditors, so you're talking about companies like banks, financial institutions, that sort of thing? And what kind of services would you provide? What kind of things are you helping them with?
We work with them on operational processes, guidelines, policies, and interaction customer service programs and such.
So you're doing a lot of the back office nitty-gritty things, and as a result, you see a lot of the information that's coming in, presumably from people like myself, but also from credit counselors, which is what gives you some of the background to talk to this about for us today. How long have you been in the financial industry for?
I've been in the financial industry for 30 years, and I've taken an active interest in the last 5 years to aggressively understand the different debt remediation processes available to consumers. So credit counseling, bankruptcy, consumer proposal, debt settlement programs.
Well, and we've talked a lot about, consumer proposals and bankruptcies on this show because that's my area of expertise. Let's talk about credit counseling then. So we've got people listening today who are sitting there going, okay, well, credit counseling, sounds like a good idea. What are the kind of things you would want someone to know who is considering, like you say, their different debt remediation options, including credit counseling? What are the kind of things you think they should know?
Well, Doug, you started off for the program explaining your position of supporting the local small credit counseling organizations that provide a variety of ancillary services in support of counseling programs. I can't agree more with you, and that is a critical, I think, necessary component of credit counseling is also addressing the underlining issues that created the financial issues that consumers face. But what I think that consumers need to understand is who they're dealing with. What are the qualifications? What are the objectives? And what happens throughout the debt management program in credit counseling?
Well, let's pick on some of those things then. So qualifications. So I am a chartered accountant. I'm a licensed bankruptcy trustee. It took me many years to get my qualifications. I had to take many years worth of programs, many exams. I assume credit counseling is the same, extensive background. Like, tell me what accreditation that they have to go through.
Well, that would be the natural assumption of a consumer approaching an organization, is that these folks have accreditations, and their self-regulated bodies often talk about the accreditation programs that their members have to go through. But research has shown, and clearly evident, that if we take the top two not-for-profit credit counseling organizations in Canada, one of them had 0 employees that were certified, had any qualifications, and the second one only had 67% of their counselors had any certification. So so there isn't that regulatory oversight. It's a self-regulatory body that's governing them. They don't have to have any background credentials. They can walk in, sit down at a desk, answer the phone, and start telling consumers how to manage their finances. And that's what's concerning.
So obviously, some of them are accredited.
Correct.
It's not like they have, some of them have no experience. And again, the people who I've had on this show, and I mentioned their names earlier, Heather and Sue, they've both been in this business for many years. They've, obviously taken courses. They have various forms of accreditation. But what you're saying is the person you are talking to on the phone may or may not have any kind of formal accreditation. So are you saying then that the first question you should ask is, what's your background? What's your accreditation? Is that a valuable question to ask?
I think that's a critical, question to ask. And to ask if their accreditation comes from their self-regulatory body, or does it come elsewhere?
And in Canada, is there an elsewhere?
In Canada, there isn't an elsewhere, but some of the counselors will say, well, I took a math course, or I took a budget course in high school, and they feel that's their accreditation. So
what you're arguing for is what, a national accreditation program, a provincial program? What would you like to see?
Well, I think it's important to have a national program, okay, that is not provided through a self-regulatory regime, but it is either supported at the federal or provincial level. The Financial Consumer Agency of Canada, FCAC, has a number of programs that they offer. Those programs should be endorsed in more of a certified process. So you're looking for some great thing. I mean, I guess the self-regulatory body, well, I'm a chartered accountant. I guess we call ourselves CPAs now. And we are a self-regulatory body. We have our own courses. We give out the letters CA or CPA after your name. Is there anything wrong with that? Well, there would be, if your self-regulatory body purported to offer these programs, but have no control, or just simply allowed people to function without those criteria. And if you look at the self-regulatory bodies, the OACCS, for example, the Ontario Association of Credit Counselling Services, they claim that their members have certified counselors. And in fact, until I raised the issue with them on their website back in 2010, they said it was mandatory that any employee of a member of their association had to be certified before speaking with the counselor. Once that was proven to be untrue, they simply removed that line from their website. That's not regulatory.
So what you're saying is you don't know for sure what you're getting if you're dealing with someone like myself who's a chartered accountant. Okay, we all know what that means. We all know what the process is to get it, but there are no initials that go after a credit counselor's name. There is no CC designation or anything like that that's universally accepted. You would like to see it more universally accepted with a strict set of guidelines and making it national in scope. So, okay, I mean, that kind of sounds like motherhood to me. I guess can't really object to something like that. I'd like to talk a little bit more about what credit counselors actually do and get your take on that. But before we do, we're going to take a quick break, and I will be back with Richard Dunwoody here on Debt Free in 30.
You're listening to Debt Free in 30 with Doug Hoyes. We'll be right back.
What are the warning signs of debt problems? Where can I find a free online debt options calculator? Where can I get free ebooks and guides? Find all the answers at moneyproblems.ca, the website for Canadians with money problems who want money solutions. Moneyproblems.ca.
You're listening to Debt Free in 30. Here's your host, Doug Hoyes.
We're back on Debt Free in 30. My name is Doug Hoyes. My guest today is Richard Dunwoody, who has over 30 years experience in the financial services industry. And we're talking today about credit counselors. And he comes at this from a different perspective. He's not a credit counselor. He's done a lot of work on the other side of the table for banks and other financial institutions who are dealing with people like myself and consumer proposals, but also dealing with credit counselors in debt management plans. And people who've listened to this show before will know we've talked about debt management plans. And Richard, you can correct me if I'm wrong here, but a debt management plan is a deal put together by a not-for-profit credit counselor where the debtor pays off their debts in full, and in most cases, hopefully they are getting a break on the interest. That's really the big advantage of a debt management program. So I've got $10,000 worth of debts on 3 different credit cards. I go to a credit counselor. They work out a plan where I pay back, I don't know, a couple $100 a month, $300 a month for 4 years, whatever it is. And at the end of it, the debts are wiped out. So I've got 2 questions for you. Number 1, what is the success rate of those kinds of programs?
So Doug, I just want to clarify one of your points that you made in explaining a debt management program, and I think this is a critical point, is that not all debts are paid off at the completion of a debt management program. So debt management program will span typically a 48-month period. Not all creditors will reduce interest or just wipe out the interest on the payments. That leaves consumers at the end of the 48-month debt management program with the residual debt still owing to the consumer. And we saw this back in December in a Toronto Star article where an unfortunate lady had gone through 48 months, paid off most of her debts, but still owed $5,600 at the end of that program.
And what I'd like to do is in the show notes, which are on our website at hoyes.com, that's HOYES.com, we'll put links to what you're talking about. So if we've got the links to that Toronto Star article and some of the other resources we're talking about, because I don't want people to be trusting you and me to explain this correctly. If there is third-party evidence, let's put it out there. So we'll put that link in. So what you're describing then is somebody who is making their payments, but if the interest is still ticking, once you've paid off the principal, well, really you haven't fully paid it off because there was still interest accumulating. You still owe more. That's really what you're saying.
That's what I'm saying, and consumers need to be aware of that when they're entering into these debt management programs. Not just accept the counselor's position that we're going to try to reduce your interest, but actually confirm prior to making that first payment, were they successful in doing that, and what are the ramifications if they weren't, successful in doing that. And you asked the question about the success of these debt management programs.
And so I want to ask about the success rate. So just to clarify what you're saying there then, if I'm entering into a debt management program, I should ask the counselor to confirm for me exactly what the deal is. So did the bank say the interest is wiped out? Did the bank say that the interest is only going to be at half the rate it was? What exactly is the deal? Because I want to know exactly when I'm fully paid out. That's really what you're advocating here, right?
Before they pay any money to them.
I want to know what the deal is.
What is the deal? What are my creditors agreeing to? And that to me is just common sense. At the end of the 48 months, what, if anything, am I going to be owing? If I go through bankruptcy, if I go through consumer proposal, I know what's going to happen at the end. And at the end of that, I walk away and I know that everything is done.
Yeah, and in a consumer proposal, we give you a copy because you have to sign it. Here is the proposal I'm making. I'm going to pay this much for this long, and at the end, all of my unsecured debts are wiped out. Obviously, there's certain exceptions like, maybe court fines or something like that, or alimony or child support, but you know in advance what the deal is. So what you're saying is, in a debt management plan, well, let me see the copies from the creditor, the letter that says, yep, we agreed to this plan. This is what we're willing to take. And like you say, that's kind of common sense.
Correct.
Okay, so now back to what you were saying, which is the second point, success rate. So what is the overall success rate on a debt management plan?
Well, in order to explain the success rate, what I'm going to reference is a comment or a statement made in a research paper of a graduate law student here in Toronto. And it comes from a comment that he received from the director of one of the credit counseling organizations, where they provided the success rate of the files closed, and that 42.7% had successfully completed a program. That's astonishing. Only 42.7%.
So about 43%. So you're talking about people who start the program, only 43% complete it 3-4 years later, whatever that is. And you find that astonishing because it's such a low number.
Well, that you have greater than a 50% chance of being unsuccessful in the program. Now, what I'd like to see, and this is again a concern of credit counseling, not-for-profit, is that they don't keep statistics. And I would suggest that the statistical success rate of your small local credit counseling organizations is significantly higher.
And I think that's a very good point. And in my experience, the reason it's significantly higher is because they are actually working directly with you. Is that correct?
That's correct, but in most cases, they're addressing the underlying issues that led to the financial difficulty. Again, if I look, and as I explain in the as a scenario, you can go through treatment for lung cancer, etc. But if you don't give up smoking, you're going to fall back into the same trap. And that's where, when we look at some of the larger national not-for-profits, they don't provide the ancillary services. What they don't provide to consumers as well is what are the issues that come post commencement of a debt management program. CBC Marketplace did a research piece back about 4 years ago on a not-for-profit credit counseling programs. One individual in particular saw his mortgage rate increased, naturally, because his credit score fell, and he ended up losing his house. These are the circumstances that people aren't seeing, and so they're saying, hey, I need to get out of this program.
And so, again, you're drawing a distinction then between local, not-for-profit, full-service agencies that are meeting with people and saying, okay, you know what, you've got other issues. You've got, your marriage broke up. You're going through some marriage issues. Let's get you some marriage counseling to help address that issue. You've got gambling problems, drinking problems, whatever. If we can address those issues, as well as looking at your financial issues and working with you over a period of time, multiple meetings to go through your budget, cut back on expenses, help you find a cheaper place to live, find a cheaper car, all of those things, you are much more likely to be successful than if all you're doing is talking to somebody on the phone.
I think you always have to draw that distinction between the local and the national not-for-profit agencies. And here's probably a good illustration of that. When the Ontario government stopped funding the not-for-profit credit counseling organizations, the minister at the time said, listen, we have to look at this and say, is it a service or is it a business that they're offering? And their conclusion was that it was a business that they were offering. And I think that the issue there, though, is that they were looking primarily at the large national agencies and not the local small credit counseling agencies. And I think if they had looked at the local small agencies, I think they would have said, no, it's not a business. It's a service that they're offering. When we talk about regulations, when we talk about certifications of credit counseling organizations, I would suspect that most of these local agencies have very strong qualifications, both in social work aspects, degrees or diplomas, and then in the underlining subject matter that they're involved in. This is not true in some of the large national.
And that's the distinction we're making. So, okay, well, I think that's a good place to end this segment. The local not-for-profit agencies that are full service provide a holistic approach to help deal with the underlying issues. The bigger companies that you don't meet with in person, it's almost entirely done over the telephone. There is no ancillary counseling. They're probably not spending a whole lot of time sitting down with you, going through your budget and all those other things. And as a result, it's much harder to deal with the underlying issues, which is why their success rate tends to be a bit lower. Great. I appreciate all that. That's very good advice. Thanks for being here today, Richard.
Thank you.
Thank you.
You're listening to Debt Free in 30 with Doug Hoyes. We'll be right back.
Do you have money problems? Don't know where to go for unbiased advice? Check out moneyproblems.ca, the website for Canadians with money problems who want money solutions. For solutions to your money problems, go to moneyproblems.ca.
You're listening to Debt Free in 30. Here's your host, Doug Hoyes.
Welcome back. It's time for the 30-second recap of what we discussed today. On today's show, Richard Dunwoody told us that his advice is to question your credit counselor. Ask what their qualifications are and make sure you know that the creditors have accepted the deal before you start making payments. That's the 30-second recap of what we discussed today. So, what's my take on credit counseling? As I said in the opening, I believe local, full-service, not-for-profit credit counselors provide a valuable service because they have the expertise to not only help you eliminate your debt, but also to help you identify and deal with the underlying issues that contributed to your debt in the first place. I'm not a big fan of agencies that only talk to you on the phone and whose only reason for existence is to make money off you by setting up a debt management plan without doing the hard work of working with you in person to solve your debt problems. That's our show for today. Full show notes are available on our website at hoyes.com. That's HOYES.com. Thanks for listening. Until next week, I'm Doug Hoyes. That was Debt Free in 30.
Looking for information on budgeting, debt consolidation, credit counseling, debt management, and debt settlement? For unbiased advice, go to moneyproblems.ca, the website for Canadians with money problems who want money solutions. moneyproblems.ca.